Hi, Nick Robbins. You're the professor in practice for sustainable finance in the London School of Economics and previously the co-director of the UN's Environment's Inquiry into Sustainable Finance System. Great to have you here, Nick.
Great to be with you.
And we're spending a bit of time talking about a few topics that you're not just an expert in, but I think really driving and mobilizing a lot of change globally. So I think what I'd like to start with is one of the topics where you have a very strong reputation of mobilizing the finance industry towards achieving climate goals through a just transition. So maybe we can talk about that. What is a just transition, and how are you mobilizing the industry?
Right. I mean, the transition climate action is designed to benefit people, and the strategy around the just transition is to make sure, as we move to net zero, that actually people aren't left behind. So as we start taking action to moderate and phase down use of fossil fuels, you don't have stranded workers and stranded communities and potentially stranded countries. But more importantly, it's about the opportunities, that as we're building the new economy, sustainable economy, we're really thinking about the social opportunities that can bring for that. So are there opportunities in terms of gender empowerment? Are there opportunities in terms of new skilled jobs? And that is about the just transition. And the key is that this is a big thing at COP28, particularly in terms of the needs and desires of the Global South, who need huge inflosions of capital. We have a number of models starting to emerge, so-called just energy transition partnerships with South Africa, with Indonesia, with Vietnam, and so on, which is designed to bring public finance, but also mobilize private finance, so that developing countries can move away, for example, from coal into renewables in ways that actually benefit workers, benefit communities, and benefit consumers.
Very interesting. I think definitely the right way forward, I guess the only way forward. I saw this morning in your presentation that there was a linkage of the 17 SDGs within that just transition framework. Can you tell us a bit more about how that all links together?
Right, and I think this just transition may be an unfamiliar phrase to people. It might sound like a bit of philosophy, but actually it's essentially for particularly people who are working now in the financial markets. It's quite straightforward. From the ESG perspective, we're trying to say there is a social dimension to an E driver. We're trying to bridge that. And then with the SDGs, I think my frustration sometimes is people take the SDGs a bit like a buffet, and they pick this one and pick that one. And actually the prize with SDGs is to connect them. And so really with the just transition, you're taking SDG 13, let's say, which is climate, and linking it to SDG 8, which is about decent work, and similarly linking it to ones about gender or education and so on. And it's to see the just transition as a piece of connecting tissue, and not operating in silos. And that's so important, one, because it's the right thing to do to uphold social standards. It's necessary, but I think it's also a way of operationalizing the SDGs and showing that these are connected issues.
Yeah, I really liked it because I think every time we talk about the SDGs, a lot of people get lost, and also the connections are not always key. So I really like the framework, so I encourage everybody to look at that. You're wearing the tie.
That's
so
right.
That's,
this is the SDG tie, woven with Scottish thread by the Global Ethical Finance Initiative.
So excellent. But I think, this is really important. We had seen also from Jeffrey earlier this morning a survey where actually the Global South had a higher awareness about the SDGs than the Global North, which was quite interesting. I know you've done a lot of work in that field in the Global North, specifically in the UK. I think you're the author of The Road to Net Zero Finance. Can you tell us a bit more about what is that all about, and how does that potentially have any implications or relevance for this region as well?
Yeah, no, it was an interesting exercise. So this was from the UK government's Climate Change Committee. So they were trying to identify, as we move to implement the country's net zero target, how do you need to mobilize the financial system? And what was interesting about that was a number of things came out of that, of quite a lot of relevance. I think people underestimated the difference that moving from a sort of climate risk approach to a net zero approach. And so one of our recommendations was that the UK should commit itself to being a net zero financial system. Because if you've got a net zero target, you need your financial system, and the government actually accepted that. So so it's actually seeing that actually you need to bring your banks on board, your insurance, your capital markets, your investors, plus the regulatory architecture. The second was then a recognition we need to move again. TCFD is great; it's a fantastic first step, but move to having net zero transition plans. If you have a target, you need to have a plan. And so that's one thing in the UK. We also now have a transition plan task force, which is going to be a legal requirement for major corporations, finance institutions, to say how they're going to be delivering in a very operational way net zero targets through their operations and value chains and so on. So that was good. And I think those two examples, I think, show how these exercises on the road to net zero finance can lead to sort of material action.
Yeah, very interesting. I think very relevant, definitely for this region as well. We see more and more of these stakeholders being pulled in to get more aware, putting their strategy in place and following through. And we heard this morning, one is putting the strategy in place, one is following through and actually getting where we want to get to. And this COP obviously is a very important one to take stock. What are some of the learnings maybe or things that you've seen that are very important to make sure that we're, companies and we as a global community are following through actually with the commitments?
So we're not in the best position, unfortunately, both in terms of mission and in terms of finance. As the incoming president of COP has said, we are well behind in terms of the 100 billion. But we also need to be thinking as a sort of a first offer. That's largely to be public finance from north to south. But the key is how do we mobilize the broader global financial system, which has, upwards of 400 trillion in assets across the globe. And how does that get mobilized? So I think one of the things that will be really key at the COP is actually to see how we use precious public finance with the highest impact in developing countries, particularly for loss and damage, resilience, protecting vulnerable communities and spurring the transition, but also using that in a way that reduces the risk for more cautious private capital, pension fund money and so on, to invest in that long-term infrastructure that's needed in the global south. And if we can get those so-called blended finance deals right, then I think the COP could be going in the right direction.
Excellent. Yeah, I think blended finance is a big topic, and it's being mentioned more and more. So I think that's very important. I think transition finance was another topic this morning. Will be as important to evolve, and having more data as well and transparency, right, is quite important. Yeah. Another question I had for you is about your previous role as a co-director for the United Nations Environment's Inquiry into a Sustainable Finance System. How was that role? Like, what did you do during that time, and what kind of legacy did you create in that role?
Right. So I had been working very happily at the time in HSBC, doing climate investment research and so on, but I was increasingly recognize that you can't just look at sustainability of climate at an asset level or portfolio level, that there is this issue around the financial system. So I was asked sort of, well, how does all this climate stuff relate to Basel III and all these issues? And it started to make me realize that the regulatory architecture, the rules of the game were important. And that was an idea which the head of UNEP at the time, Akik Steiner, had a similar idea. So we set up this inquiry to really say, well, what would it mean to have sustainability written into the architecture of the financial system? We kicked off in 2014, so in the run-up to the Paris Agreement. And that was the time when central banks were just starting. Mark Carney was just starting to think about the work he was doing, the tragedy of the commons. And our report was published in the run-up to COP. I think we can see that some of the sort of the messages in that Paris COP were taken on board. But probably also more importantly, we then worked very closely with China. And I think sustainable finance had largely been seen as a sort of northern US, European thing. But suddenly China said, we're going to do our first G20 and we're going to make green finance the big new theme for our G20. And suddenly you had a global race on your hands. And there was some good cooperation. So I think that was one result that actually sustainable finance, green finance got into the G20. I also, when I was there, set up a club of financial centres, which is relevant in DIFC, called Financial Centres for Sustainability, to see actually how these really important platforms for mobilising finance. And then we formed the first grouping of insurance regulators on sustainability, which still goes on, and they are a sort of, I suppose, a vanguard group of looking at actually how they can reflect climate risks into the way they're doing. So there are some positive legacies. It's a bit, I mean, it's a few years years ago now, but in the last COP in Egypt, Sharm el-Sheikh, all the governments of the world said we need a transformation of the financial system to mobilize the money we need for net zero. So I think this theme of system transformation is now very much sort of almost at the sort of the heart of how we're going to deal with this issue.
It's great to hear, how it started, and I'm sure it's great for you to see how it evolves from the early days. We had the DFC this morning talk about regulation in the DFC as well as in the UAE and how that's quickly evolving. We obviously follow the global developments as well, which are very positive. But I think, it will take some time to transform the full system, but I think it's in full speed. And great to hear that, where some of those things came from. I'd like to talk a little bit about COP28, since it's in the UAE this year. There's a lot of expectations on COP itself, a lot of hopes, but specifically also on the finance industry. What's your hopes, your expectations? What are the things that need to change? And what's your view on that for this year's COP?
Well, I think it's really good it's been held here in Dubai with such a sort of vibrant financial centre. So I think there are a number of things. Firstly, we've got to make real progress on the funding for this new loss and damage fund. So that is providing funding for vulnerable developing countries where the damage of climate change is already happening. It's not about protecting from the future. Yep. And there's a concern, I think, there could be a FINO, a fund in name only. So I think that's going to be a clear thing, that there is real money on the table for that. But then I think there's sort of finance more generally for speeding the transition, particularly in developing and emerging economies. It's very clear that most of the capital that's needed for both net zero and resilience has to be invested in developing emerging economies. Yeah. But these are the places with the weakest capital markets and the highest cost of capital. Yeah. So we've got a pure sort of market approach is not going to work. We've got to think quite smartly about that. So we need to have a upgraded role for the MDBs on the de-risking side. And then I think perhaps a more serious discussion with the pools of capital, let's say, in the industrialized country markets, about how it would become normal for those to be routinely investing in the sustainable infrastructure of the emerging world, which is where the growth is going to be, which is where the returns are going to be. We know the risks at the moment are perhaps too high. But I think I haven't seen really people yet thinking about how we make that routinely. So it's not a nice project or a pilot project, but it becomes routine. Yeah. And again, I think with the sort of the architecture and the experience that you've had in the UAE, the sovereign wealth funds, Masdar, and so on, thinking quite sort of ambitiously about what we can achieve at COP. I think that's the sort of right way to go.
Very interesting. Yeah, I think the role of Dubai and the UAE in that can be quite big. Nasdaq Dubai, as we heard this morning, is the largest exchange for green and sustainable sukuk globally. Over I think 70% of US dollar denominated global sukuk. Sukuk, again, a small market, but a very important one. But also a growing market, over $18 billion of green, sustainable sukuk and bonds together. So it's and many of those are actually not UAE issuers, but these are issuers including China, including other markets, Indonesia, regional ones, and so on. And I think this could be a platform for some of this financing to be brought here and to mature the emerging markets to make that funding available.
I think Indonesia is a real player in this. I think it's they had a very successful COP against very tough odds with the global situation. They've been real leaders on the green sovereign bond and sukuk area. And I think see a real potential for their economy, but also for financial innovation. So I think that sort of bridging role that Dubai can play in terms of linking to key so-called emerging economies such as Indonesia is really, really good.
Excellent. So we're coming slowly to an end of our conversation. I could continue way much longer, but we have to wrap it up soon. So I want to hear a bit of your view on, the last couple of days you've been in Dubai at the DIFC. You've seen the program and what's happening on the ground on the path to COP28. What have you seen? What's your, what has the experience been, and what are a few thoughts you want to leave to the listeners of this region?
Right. Well, I think there's a lot of goodwill, and I think what is interesting now, sort of let's say 5 years ago, the sort of latent desire from the financial community to invest in a sustainable way has moved in a huge way. I mean, 5 years ago, you didn't have that commitment. You had a large-scale commitment. There's pushback a little bit in the US and so on. So I think the real challenge, and this is an opportunity, I think, for Dubai, is turn that sort of latent intent into real deal flow. And so that's what I'm hoping to see. We're very interested as we started this conversation and thinking about the just transition, how we link the sort of the green and the social justice dimensions. And there I think maybe there is it'd be very interesting to sort of innovate and think how the green sukuk market, for example, could have a sort of social plus to it, as well as sort of channeling capital into renewables or whatever. You're also thinking about the sort of human development dimensions of that. So I would like to see perhaps at COP28 a sort of a series of sort of new innovations coming out, which are real, tangible investment products, which people can invest in, sort of, in a sense, the day after COP. So COP isn't a sort of a one moment, but actually leads to sort of continuing activities in the years ahead.
Excellent. Nick, thank you so much for the time. I think very insightful. I encourage everybody to read more about the just transition. And I hope to have you back in Dubai very soon and continue the conversation. But thank you very much for today.
Christian, thank you. I hope to be back soon. Thanks.
Thank you.